Hi, I'm Brooks Zachary with Horizons ETFs. Thank you very much for joining me today. Today I'd like to use the Horizons Seasonal Rotation ETF, ticker symbol HAC, its weekly commentary as a basis for this market update. So let's jump right in and take a look at the market action last week. Here we can see the S&P 500 was up 2%, and the Canadian stock market was up half of that at 1%. It was an interesting week last week, as we saw Monday being a negative day for the S&P 500, as the concerns over the rising cases of the COVID-19, particularly the Delta variant, caused the Asian markets to be quite negative on Monday, when that transferred over to the North American markets. But that was shrugged off by investors as better than expected Q2 earnings reports kept on rolling in. And what we have seen so far as of last week is 88% of the companies in the S&P 500 have had better than expected earnings, which is a positive note for the overall markets. The S&P 500 has once again closed at an all-time high as well. If we take a look last week for the action for HAC did increase its consumer staples position. It also increased slightly its position in U.S. government bonds. Closed out its short sell position in the small cap sector and transferred that over into the industrial sector. Also, it took on a small short sell position in the consumer discretionary position weighed against the consumer staples, and took an initial position in the utility sector, which starts the sweet spot to its strong seasonal period at this time as well. So what's happening in the markets overall? Well, we can take a look here and we can see that if we take a look at the daily action last week, we can see that, this is the previous Friday, that's July 16th, was a negative day. Then we saw that big negative day on Monday of last week, and on the 19th. And then we saw Tuesday a positive day, Wednesday a positive day, Thursday a positive day, and also Friday a positive day. The market was on a trajectory and closed at an all-time high, over 4,400 on Friday. So what else was going on in the market? Well, let's take a look at that all-time high on what's been happening. So this blue line here represents the 50-day moving average. We can see we have had some dips recently for the market back down to the 50-day moving average, and it's managed to bounce off of that 50-day moving average. And that's what we saw last Monday. We saw the action for the S&P 500. That was not quite right there. I'll just draw a little bit better there. We did see Monday the S&P 500 come very close to the 50-day moving average, and investors bought the dip and then pushed the markets higher, and there was some positive influence as well. I do want to point out, though, that we did see some declining volume last week on that, with the S&P 500 rallying and going to an all-time high. Typically, you want to see volume rising at the same time to confirm that, which typically shows some strength in the rally. We didn't see that last week, which could be a sign that maybe there's not a lot of conviction in this rally. Let's take a look at some of the sectors in the market. Well, first of all, here's the S&P 500 at up 2% last week. If we take a look here, the cyclical sectors of the market right here in the middle here, and we go across, generally they underperformed the S&P 500. Industrials was the better sector overall. So where was the money flowing? Well, we did see healthcare and the defensive sectors do quite well. Utilities was actually was down, and we did see some lackluster performance for the real estate sector and consumer staple sector, which were positive, but not nearly so much as the S&P 500. So the money really was flowing into the growth sectors of the market. So what they're flowing into is consumer discretionary, communication services, and technology. Interesting that interest rates last week, very volatile, but the yield on the 10-year Treasury note closed down very slightly. And typically you see the growth sectors actually perform when we see the yield go down by a fair chunk, but really it was flat last week for all intents and purposes. And yet the money was really flowing into the growth sectors of the market, particularly the large companies. We've seen weaker and weaker market breadth as investors have put their money into some of the bigger companies and in the technology sector in particular. So where do we stand right now in the market overall? We've seen an all-time high for the S&P 500, which is a positive thing. We did see some that being happening on lower volume, which might say we may not have some legs here for the rally. We do have some interesting events happening this week. We have Microsoft reporting earnings, Apple, Amazon, Alphabet, aka Google, and also too as well Facebook. Now some of these big companies are really going to set the tone overall, and so it's going to be interesting to watch the reaction from investors to these earnings. which actually could, if they're quite positive, could drive the market up higher. But nevertheless, if we do see the market actually sell off on their earnings, that would mean that maybe the market's at an inflection point at this point. We also have the Federal Reserve meeting this week on Tuesday and Wednesday. Investors aren't expecting much as far as actual action announcements. It's more the wording around the announcement on Wednesday after the meeting finishes. That's really of interest here. We're looking for some of the wording because Powell's really been steadfastly very dovish, despite some criticism from rising criticism from analysts and economists as well. And so it's going to be interesting to see the investors' reaction to that event. From a seasonal basis, we're getting very close to August. August starts next week for the stock market on Monday, and August is one of the weaker months of the year. We're also in the last week of July, which tends to start where the period where volatility starts to increase on a seasonal basis as well. We tend to see rising volatility at this time. So we've got this combination of rising volatility on a seasonal basis, weaker August as well at the same time. So this is a time where investors need to be a little bit cautious at this time, despite the stock market setting all-time highs for the S&P 500 at this time. Thank you very much for joining me today.